Hi there. This week we're looking at Chinese investor sentiment. Most importantly, what we're focusing on is we're focusing as asset flows in and out of Chinese exposed ETFs. Now obviously the macroeconomic news out of China has been pretty lackluster in the last couple months, especially if we look at the last PMI results, which came in worse than expected. Now this is many wondering whether or not China is going to be able to deliver the kind of growth that investors have long started to expect from it in the last few years. Now, if we look at since the last 3 months, what we've seen is investor sentiment towards Chinese exposed ETF has actually been pretty buoyant. So we saw over $6 billion of inflows, which really kind of tells you that despite the lackluster economic news, investors are still clamoring to increase their exposure towards the country, which is obviously, you can read it as a vote of confidence towards the country's prospects going forward. Now, this is not unanimous across the world, however. If we look at the individual regions that are exposed to China, what we see is US and Asia Pacific investors, which are basically Asia without the China, really have led most of those inflows, especially in August, where US investors really led the way and increased their exposure towards China quite significantly. Now, if we look at in August, what we saw was European investors started to sell off some of their China exposure. Another interesting fact was the fact that domestically listed Chinese ETFs that have domestic exposure actually saw outflows in August. And if we extrapolate this trend over a longer period of time, what we see is that Chinese investors have actually pulled money from products exposed to their domestic market, which isn't really showing you much strength in the regional market there. So really, if we're recapping everything, what we can see is investor sentiment is still quite buoyant, which can be viewed as a vote of confidence towards China, but is by no means unanimous across the world, especially when we look at the domestic market. So with this in mind, we encourage you to check out the commentary section of the market website to read the full report. Thank you very much and have a nice week.